Joseph Rizzello, NewSquare Capital Chairman and CEO, and Ryan Kirk, President and Head of Portfolio Management at NewSquare Capital. Your firm has the view that long-term investment success is not about market timing or making perfect calls, but instead involves process, perspective, and emotional control. Now, what exactly does that mean, and how do you apply it with your clients?
I think we come at it from the perspective of what are some of the other pitfalls that we see the average investor fall into in the investing landscape. There's a lot of studies that are not published by NewSquare Capital, but are just available to the industry. Dalbar being one of them that we always quote as a firm, and it talks about the average investor only keeping their portfolio or their investment philosophy for about 3 to 4 years. And we take the stance that that's not long enough to accomplish the goals for the average investor. So, but many fall into that pitfall. We study history a lot as a firm, and we look at the very best investors that have ever done it within the space. And those investors can have a great long-term track record, but can go through these shorter periods of time where they run into a market period that it's just not jiving with their investment philosophy, or they're just not hitting on all cylinders. Try to keep it simple, but these are the best investors that we're talking about, and they go through those periods of underperformance or out of sync with the market. So if we can see that the best investors go through that, we have to have a process in place that can weather that storm. So we talk a lot about risk management as a firm, and I just think, and I'll stop here and let Joseph jump in. But it's when we're talking to our advisors that we deal with and the end investors, that idea of process and perspective and kind of taming the emotions that all of us as human beings have, that's where we concentrate. We can talk till we're blue in the face about our investment strategies, but so much more comes into play when dollars and cents are at play in the market on a daily basis.
Interesting. Joseph, what's your take?
Yeah, no. So many of the things that Ryan just mentioned and rattled off, long-term, um, patience, discipline, risk management. There are mantras at New Square Capital, and and studying the most success. We're students, and we have educated ourselves from those investors through the decades that have had long-term success. And those same principles, risk management, behavioral management, managing your emotions, all of those things, they built the process, and they stick through the process, stick to the process. They may tweak it a little bit here and there along the way. And the data, Ryan talked about the data, the Dalbar data. The data is always the same. The average investors lose their patience. They're scared out of the market, like early April when everybody thought that the world was coming to an end and there was no recovery from it. But, historically, we've had those periods. Yet long term, the market goes up. Okay. So we think that the best way to do that, as I said, we're students and we apply those principles. Many of those principles our portfolio managers do in the way they approach our portfolios. And we work very closely with our advisors and their clients because they hire us to manage their client. And 3.7 years, if you're a growth client, is not enough time. And you may have a great return after 3.5 years. You may have a horrible return. But we believe the longer that you give your model a chance to work, a 10-year period, 7 to 10 year period, you're going to be a lot more successful. And the data bears that out, in terms of time in the market. So that requires psychology, like, because when you have periods like early April, um, and you couple that with the news media that is, generating stories on what's going on, and people are making predictions, that's a scary time. So it's important for the client to know what they own. It's important for the advisor of that client to make sure that they know what they own and how they're going to react in different periods. So we believe in education for ourselves, and we believe it's critically important to both advisors, individual financial advisors, and clients.
Now, let's take, since you mentioned April, let's look at the concept of changing market dynamics. Given everything from tariffs to Federal Reserve concerns, does this view that your firm have, is it something to easily discuss with both advisors and for advisors to discuss with their end clients when we're going through something that seems like a regime change on an economic and financial level? Or is it something that is actually very hard to do because no one knows what comes next?
Yeah, so um, it varies from advisor and client. The more you know about what you own, the easier it is. And that's a great time to refresh and say, this is what we have in the portfolio. This is what we're doing on the risk management side. We believe that we'll move through these periods. And we'll do our job on the risk management side. Some of our portfolios were a lot more aggressive on the risk management side than the others, but every one of our portfolios at NewSquare contain a risk management component to it. So for some clients and advisors, it's just a refresher. Other clients, and there were a lot of very good clients that were very concerned during that period of time. And the best information to give is turn off the news. Okay. Um, if you have trust in your advisor and your asset manager, and we're always happy to get on the phone with a client and talk through those periods. And we did that during April. So some clients, it's a little bit more challenging. However, they want to hear from you during those times. They want to make sure you have your finger on the pulse. And as Ryan said, the best investors of all time go through those periods where you have major volatility on the downside, right? And they work through those times because they stick to their process.
Thanks. Now, Ryan, do you have any final thoughts?
Joseph mentioned the risk management component to it. Chris, you just asked about sort of if you're going through regime changes in markets or political changes or what have you. But I think that focus on risk management is it always comes into play, and it's not a concentration for most in markets, but it is for us. And I think defining that the ability for risk management, it's just being aware and having the ability to manage the downside. So I think ideally you want to have an exit plan when you're looking at whether that's a stock or any type of investment that you have, and you really want a clear plan when disaster hits. It's kind of why exit signs are lit up in a dark room in a movie theater or a store, because you want some clear guiding principles to help you out in those periods of time. And we have a lot of concentration on that as a firm. All of our strategies have some component of risk management tied to it, because we find that to be the most important part of investing, because we want our clients, we want our portfolios to be around for the next several decades. And the only way to do that is to have some component of risk management tied to it.
Joseph, Ryan, thank you very much. These have been excellent insights. Thank you for your time.